Hey Rodrigo, how's it going? So I'm going to show you how I do my top-down analysis. And on top of that, I want to show you today's trading and how it went, all my thought processes, and how it went horribly wrong. So hopefully you can let me know because my mind was not it. Anyways, so if you can see my screen here, I'm trying to make it also short and sweet. So how I look at the top down is I start with the narrative, what price is doing and likely to do, the market maker sell model or buy model, and then the price, the premium or discount arrays, PD array. Then I look at the structure, is it bullish or bearish structure on different time frames. We got the daily 1 hour 15. And then I go down to the 1 minutes and 5 minutes. Then I choose my bias. Do I go long or short? And then I go down to my risk model. Does it give me a 10-point range of movement from my entry or to where it's headed to next, likely to head to next? And then my entry model. Do I use the fair value gap, order block, or breaker block? So starting off on Yasmini, I'm looking the daily narrative. So looking at the lows been taken. I'm looking at sell side liquidity and new highs being made. I'm also looking at what premium and discount arrays are being respected. So I see this bullish move. I see the fair value gap is being violated, but there's one down here. I see it, sell side liquidity been taken, buy side liquidity been taken, sell side liquidity been taken. Very, very ugly price delivery here. And then there's another fair value gap that's created after this sell side liquidity been taken. And so it's respecting discount arrays and it is making newer highs right here. And here I see that it's made new highs. So I'm still in the narrative and I'm reading what price is doing right now. And right now it's telling me that every time its price has dug into a discount, it also makes a new high. So it's telling me that the narrative of the market is, in order flow, is that it's moving to the upside. It's tackling the buy side liquidity. Even though I see this sell side liquidity taken, the fact that it abruptly came up and respected a discount array, fair value gap, means that it's likely to head up higher and tackle this. So that's my narrative. On the 1 hour, oh, these are days, by the way. On the 1 hour narrative, I'm still, oh, yeah, I forgot structure. Lows are taken, new highs. So the bias, my structure is bullish. So on the daily time frame, I am bullish. And so what I will want is to see my other time frames align that are structurally bullish as well before I go long. Then I go on my 1 hour. And then this is where it gets interesting. Because I use the market maker model, I can see that this low's been taken, new highs. So it broke out into new highs. Discount arrays are being respected and new highs are being made. Very choppy, but the fact that when I'm looking at this is what I imagine. I'm looking at either this or this. At this consolidation is taking new lows, making up new highs. Lows are taken, new highs are formed. 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 Low taken into a discount, new highs formed. Lows are taken, discount, new highs formed. So the narrative to me is that it is going higher. Consolidation right here. I'm looking at the market maker buy model right here. And then when it gets to here, buy stops taken, which it did. Then became a shifted market structure bearish. And then I see that it's respecting this fair value gap with this bearish order block. And then highs are taken and new lows are form. So now that it switched from lows taken to new highs are formed to highs are taken, buy side liquidity, and new lows are formed, I'm thinking, is it up here? Are we in this area right here where there's a shift in market structure with fair value gap to go lower? And if I use, when I do, I use often the NASDAQ as a correlated market. The new high is formed here, but the ES failed to make a new high, and there's a shift in market structure. So there is a cracking correlation with the shift in market structure, which means that the likelihood that we're up here is very likely. New lows are formed, fair value gap, new lows are formed. And so my thought was this morning, so my thought was morning that the narrative is showing that new highs are taken. So, I mean, highs are taken, new lows are being formed. And I'm looking at the PD arrays, the PD's array, fair value gap, tapped in, make a new low. Fair value, no, there's no fair value gap, but order block, making new lows. So that narrative to me is on the market maker sell model is likely occurring. And so I'm looking at the structure. Hourly is bearish after this low is formed. I use the wicks. So my bias is bearish from here into the sell side liquidity. So going back to this narrative, what is price doing likely going to do? Right now, I determine that it's likely the market maker sell model based on the cracking correlation. The highs are taken and new lows are formed. The structure on a daily is bullish. However, on the 1 hour and 15 minute is bearish. And intraday, I can look to be bearish. While on the daily, it's so high into the premium because the buy side liquidity has already been taken, and you can see fair value gap, sell side liquidity that it can go to. Hindsight, of course. Hindsight is always 2020. Gonna go down lower, 15 minute fair value gap. Here's the new week opening high, new week opening close, and the low from last week. And so I would look to enter short because my bias, because my narrative is short, market maker sell model. Structure is bearish on the 1 hour, 15 minute intraday. My bias is short. Risk model, 10-point range. Does it allow me a 10-point range? Yes. I'm gonna tell you why I entered and why I died. And the entry model, it could be the fair value gap, it could be an order block or a breaker block, depending on what setup provides. I trade all three. It is ICT Silver Bullet is from 9 Central Time to 10 a.m. Central Time, where you would find a move that would allow a 10-point range move. What I see is 8:30 market open Central Time. Highs are rated with this wick right here, and that wick, and then there's a tiny bit shift in market structure, but I still took it, unfortunately. Well, unfortunately, tiny fair value gap. Slight drawdown, big drop. I'm like, okay, I see this big old drop. I'm going to pyramid in this fair value gap. Because when I saw it like this, I'm like, oh yeah, easy fair value gap, aiming for this sell side liquidity. Boom. And then after I got out early, because when I saw this high being taken out right here, and I saw this bullish fair value gap, I'm like, okay, I guess the bearishness is wrong. It could be going up higher to take out this high, because on the 1 hour, I see this wick, this right here, this wick, kind of took a sweep low. anyways, the bullishness was hindsight. It's not that strong. I shouldn't have taken this long, so I took this long, and it went up close to this buy side to get need to take profit, and then it reversed lower. And as soon as it hit this fair value gap, I'm like, okay, there's a bearish fair value gap. It respected it, makes a new low. I'm like, I'm gonna close early. So technically, I closed the first trade early. So the first trade with the pyramid early. So overall, I was down half of my risk. And then this one, I closed out half as well. So I'm down a full risk, a full 1% risk. No, well, excuse me, I'm down a full risk. I'm risking 0.5%. I am down 0.5% because of these two trades. And then after I saw this, I'm like, oh yeah, now it's definitely gonna go down. Big shift in market structure, fair value gap, and I'm like, oh yeah, real good. It's definitely gonna hit down here. Nope, went up, took me out. I lost my full 0.5% risk. So I'm down overall with one trade plus pyramid, second trade, and third trade down 1%. And I was thinking, God damn, Rodrigo, I was just telling him that I can only take 2 trades max. And I convinced my brain that technically this is one whole trade because you only lost half of your normal risk. And because of these 2 trades that I lost, it only equals to one regular. I'm such an idiot now that I say it out loud. Anyways, so I took this regular loss, and then now I'm like, okay, I'm done. No more. And it's funny because how my very first position with my 5-point stop loss, had I kept it and been patient, and my trading plan is a bit unclear when I think like this. You see how my stop loss never got hit, and guess what? Easy down 1 to 4. And then because I already ran out of bullets when I told myself I'm done trading, guess what? Another opportunity presents where I could have gone in between 1 p.m. Central Standard Time to 2 p.m. Central Standard Time. Hey, look at this. I've been taking noodles of farm. And I looked at this wild. I saw it right here. I'm like, yep. Guess what, Don? Because you ran out of bullets, you couldn't take that trade. Looking at this hourly range, looking at this hourly low. Guess what? Could have targeted that on a 2.9. So I ran out of bullets this morning. I couldn't take the second trade. Although all of this, I still ended up taking long because, yeah, my mind was out of place. So that is the general gist of how I do my thing. I look at the narrative. Price is doing, market maker X model. In this case, it's the market maker sell model. And what PD arrays are being respected and being made, structure bearish. Entry models here were fair value gaps and hindsight. Then I kept this one trade where I kept my short, and I wouldn't have gotten in here, or at least had I did the 5 tick. Oh, I still would have got stopped out. That's fine. I would have been pyramided in. But I kept this first position. If I did pyramid in, but either way, even if I didn't pyramid in, the problem was I did hop back and forth from short to long. I said that I'm going to go short. It indeed went into tackling sell-side liquidity, so my technicals were right, but my forward trading This is actually, now that I think about it, revenge trading. Yikes. And this was revenge trading. Yikes. Okay. Yeah. So please, Rodrigo, I'm letting you know. I just realized I was revenge trading. Thanks.